government, India jumps 30 places on World Bank's Ease of Doing Business Index, right up to the 100th spot. Arun Jaitley says there's scope for significant improvement in rankings. The finance minister says he's confident of breaking into top 50. And we'll get you some of the biggest voices on India's big jump. Anna Dixon of the World Bank, Amitabh Kant from Niti Aayog, Kiran Mazumdar-Shaw of Biocon, and Shobhana Kamineni, the chief of CII, will speak to us up ahead on Primetime. Now, the good news continues on the economic front. Core sector growth hits a 6-month high of 5.2% in September. Fiscal deficit falls to 91% of the budgetary target. Bharti Airtel meets estimates in the second quarter despite the geo impact. Profit drops for the 6th straight quarter. Average revenue per user slumps to its lowest level. The Insurance Regulatory and Development Authority of India fixes the maximum commission paid to insurance agents and intermediaries for motor insurance. And the army will build the footover bridge at the Elphinstone railway station in Mumbai. Defence Minister Nirmala Sitharaman says construction will be completed before the 1st of January. Now, in what comes as a big boost for the Indian economy, India has cracked the top 100 in the Ease of Doing Business rankings for 2018 as published by the World Bank. India has jumped 30 places to improve from 130 rank it achieved in the 2017 review to 100. Now, what makes this achievement even bigger is the fact that we only moved up one place from last year, that is the year before that. Though demonetization and GST were not included in the report, the World Bank report highlights India as one of the top 10 economies that improved the most. Now, Finance Minister Arun Jaitley has said that the jump is the recognition of the government's reform push. He also said that India is capable of improving even further.
इस साल कुछ विशेष पहलू हैं, उन्होंने कुछ देशों के नाम लिए हैं जहां स्ट्रक्चरल रिफॉर्म्स हुए हैं। ऐसे 10 देशों के नाम लिए हैं। बाकी देश बहुत छोटे हैं। उनमें मेजर बड़े देशों में से केवल हिंदुस्तान का नाम लिया है कि इंडिया इज वन कंट्री विच हैज बीन अंडरटेकिंग स्ट्रक्चरल रिफॉर्म्स दिस ईयर। जितने भी टैक्सेशन साइड पे हम लोगों ने सुधार किए हैं, पिछले वर्ष तक 189 कंट्रीज में हम लोग 172 पे थे। यानी टैक्स देना ये एकदम बहुत ही कम्बरसम व्यवस्था थी और हम काफी नीचे थे दुनिया में। दिस ईयर वी हैव मूव्ड अप 53 प्लेसेस। जो भी सारा ऑनलाइन सिस्टम बना है, टैक्सेस जमा कराने का, रिटर्न्स फाइल करने का, असेसमेंट्स का, तो हम 172 से 119 पे आ गए हैं। We have moved up 53 places.
Well, let's now speak to Anna Dixon. She's Vice President, South Asia region from the World Bank, to understand what really has led to this big jump. Thank you so much, Ms. Dixon, for speaking with us on Bloomberg Quint. What are the big factors that have led to this pretty dramatic rise of India in these rankings?
Well, India has improved its performance across the board in doing business. We measure 10 indicators, and India has actually improved in 9 of these. So things like the time taken to start a business, the ease of getting construction permits, the development of the new insolvency and bankruptcy code. These are all things which are measured and which are picked up. One thing that's important is that the things that we measure are things that we can compare across countries. So it's a standardized survey, and it's measured at the firm level. So it doesn't just pick up changes to legal codes, but also the implementation of the regulations and the laws at the local level for small and medium large firms.
Ms. Dixon, paying taxes or ease of paying taxes is one of the factors where there has been a significant jump, and this is pre-GST. How are you looking at the entire GST reform and what that could do to our rankings?
The implementation of GST started after we collected the survey data for this year. So we actually will expect to start picking up the implementation of GST in next year and the year after's survey. The paying taxes indicators that we pick up relate to payment of corporate income tax, not the GST, but we've seen improvements in paying taxes even before we observe the implementation of GST. GST in a country the size of India, the implementation of this will we expect to take a couple of years before we see it fully showing up in the data.
Now, there has been some talk, the DIPP chief also just spoke, and he was talking about the distance to frontier barometer that has also been marked in the various parameters that the World Bank marks for ease of doing business. We have jumped about 4 points on this parameter. Can you explain to us what it is and why it's significant?
Okay, the distance to the frontier measures the movement towards international best practice. So it's an absolute ranking. And in that, India has actually improved by 8%. We also compare India's performance to other countries, and of course other countries are moving at different rates. So we measure both because we want to know that India itself is improving against its past performance, but it's also moving faster than other countries in the world, which is its ranking moving from 130 to 100 in the world.
Another big jump that India has seen is in the factor of resolving insolvencies, where we have jumped to 103 from 136, so it's a 33-point jump. Now, that is based, and you can see that in your report, on the legislation of the IBC. Now, in these cases, do you look at just the fact that a nation has passed a legislation? How important is the implementation on the ground, and would you adjust for this, seeing the implementation over the next few years?
One of the things that's important about this survey is that actually it measures the experience at the firm level. So it captures not only the change in the law, but the way in which the laws are implemented. So business process engineering, making it easier for users to access the legal changes through, for example, online applications, simpler business processes, reducing the numbers of steps, the time, the cost to access a particular service. So the implementation is very important, and that's why we see persistent efforts in getting feedback from service users is really helping India to make improvements in all of these aspects of doing business.
You know, two parameters where we have seen a minor drop, though, is starting a business and registering a property. What were the factors or the reasoning behind that?
In terms of starting a business, where we saw India made improvements was making starting a business faster by merging some of the application processes, and particularly the application for a permanent account number and a tax account number, and also improvements to the online application system. And in Mumbai, we saw additional steps which made the process even faster by merging applications for value-added tax and the profession tax. So these are specific measures that the survey picked up. On your question on why the ranking went down, I'll have to get our local staff to let you know.
All right, we'll leave it at that. Thank you so much, Annette Dixon there, the Vice President, South Asia region from the World Bank, taking us through the factors behind India's huge jump, 30 places. So we've cracked into the top 100. And at the end of the day, when you're talking about ease of doing business, the question is that how does the industry see it? Is it become easier for corporates to do business? To talk about that, I'm joined now by Kiran Mazumdar-Shaw. She's Chairman and Managing Director of Biocon, of course. Thank you so much for speaking to us on Bloomberg Quint, ma'am. Has it really become easier to do business in India over the last 1 year? We've seen the big jump in rankings, of course, but what has been your experience?
Well, as you can see, the factors that have contributed to this jump from 130 to 100 seem to be in the area of the easier payment of taxes, availing credit, insolvency resolution, enforcement of contracts. And of course, there's a very startling factor which is about much better corporate governance in India when it comes to minorities protection. So I think all these have basically, climbed a few ranks and have contributed to this improved ranking to breaking into the top 100. But on the other hand, if you look at some of the other contributors to ease of doing business, we have a long way to go. If you look at simple things like starting a business, if you look at other aspects of registering properties, getting an electricity connection, trading across borders, all these actually need improvement. Now, I think e-governance has certainly played a very important role in moving the needle in terms of climbing up these 30 positions. And we need to look at some of the low-hanging fruits when it comes to some of these e-governance online models that have helped us to move these needles. Now, property registration is one such area where we are doing very badly. E-governance in land registration is something which we must focus on. Why is it that some states are doing better than others? I know that in many states, registering properties, getting, comfort that there are, that these properties are unencumbered, e-governance can help a lot. And we've done nothing to actually move the needle in that respect. Starting a business, why does it take 30 days to start a business in India, whereas most countries who are in the top 100, it takes less than a week? This is again a very simple opportunity. Again, online, models for starting a business must be adopted. So I think we have a number of opportunities to further improve these rankings. And I think as somebody who is an integral part of corporate India, I look forward to really focusing on some of these low-hanging fruits. And I'm very confident we can actually climb up maybe 50 ranks next year if we actually focus on some of these areas which are really, really easy to do.
Yeah, we'll come to that in a bit more detail about what we can do. But just one question for you, ma'am. Now, demonetization and GST, both have not been accounted for in this report, two big events in this period. What could these two factors do to India's ranking? Of course, demonetization was not looked at, but GST moving forward in the way it's being implemented today, what impact do you think that will have on ease of doing business?
So I would look at it in 2 or 3 ways. Obviously, GST is a big economic reform that has not been factored in, and I think if we can look at GST going forward, it can be a huge opportunity for us in terms of ease of doing business, because it just simplifies the whole tax structure. That is certainly a very, very important part of our ranking. And I do hope that, with all this constant tweaking of the GST, I hope we get into a simplified structure that can actually help us move the needle dramatically. When it comes to demonetization, I think the big opportunity for us is digital payment and digital gateways. And I think this is where we can actually focus on in terms of ease of doing business. Better transparency, better accountability is something that demonetization can enable us to do. I think GST also enables us to get many more people under the tax net, which actually makes the whole system a lot more under the formal economy as opposed to an unaccounted informal economy. And then you come to other aspects of e-governance and new reforms. RERA is one such reform, which again I hope can help people in the real estate business to do things in an easier and more transparent and accountable manner. So I think all this will be viewed very positively by World Bank in the next rankings.
You said earlier, ma'am, that India could break into the top 50, and of course, it's a stated purpose of this government. But can we really break into the top 50 without key reforms in two areas I'd like to mention: land acquisition or land reforms and labor reforms? Because these are politically difficult to actually implement, be it this government or the previous one or any government.
You're absolutely right. I mean, I personally believe we can break into that top 50 sooner than later, but I certainly believe that land reforms is a big contentious area which we must resolve, and I really believe that e-governance and is the way to go about land reforms. The other thing is, of course, labor reforms. Again, labor reforms is a much more complex area. And if something can be done along the lines of labor equity and an equitable sort of reform for labor, which some states have managed to actually pull off. I think Rajasthan pulled off a pretty good Labor Reforms Act. I think Gujarat is trying to do the same. And if we can actually look at a Labor Reform Act, which actually can help us move up that curve, I think it's something that we need to focus on. I don't have any clear-cut answers at the moment, but I think it's about jobs, it's about job protection, it's about job creation. And I think, today, under the duress of our inability to create new jobs, obviously labor reforms is going to be a pretty tough ask. But if we can focus on this whole area of job creation and equitable job creation, then I think labor reforms becomes an easier task.
Thank you so much for speaking with us, Kiran Mazumdar. They're saying that hitting the top 50 is not such a big task if we target the low-hanging fruit, and we'll come to more on that. But meanwhile, I have Mr. Vishesh C. Chandiok joining us now on this discussion. He is National Managing Partner of Grant Thornton, India. I'm also joined by Shubhada Rao, of course, Chief Economist at Yes Bank. Thank you so much to both of you for joining us. I'm going to start with Mr. Vishesh, because our biggest jump has been on paying taxes, where we've jumped 53 points. From 172 to 119, and I was looking at the details of that report. A large part of it is because of moving processes online, because of which the hours per year that are needed to file taxes on average have gone down from 240 to 220. Do you think that change has really been felt? What has been your experience? Does it back what this ranking says?
Yeah, thanks. I think, yes, paying taxes, and in fact, all the areas have moved in the rankings. I was just glancing through the report, which I've just received. Other than getting electricity and registering property, those are the two where there's been no move. Paying taxes has moved, of course, as you noted earlier. GST, which is the single biggest change, which is hopefully eventually going to lead to significant simplification on consolidating our tax regime, is yet to be taken into account. I think the other big move, seeing from the numbers, which in my view was even more significant than paying taxes, is obviously resolving insolvency, which is up to a rank of 103 from 136, 137 consistently over the last 3 years. 2015 was 137, 2016 and 17 was both 136. And that's gone, to as high as 103. And that's because we now have a defined time period, 6 months, maximum 3 month further extension, to resolve situations of insolvency. And if no resolution can be found, then a 2-year period to liquidate companies. I think I was also looking at the comparative with, who are the countries that have moved, and amongst the biggest movers. Very interesting that Thailand is the only other big country who's actually made a move even bigger than India's. But I think it's nothing short of commendable. The significant shift of 30 points. It is very important to note, however, that this ranking is based on just Delhi and Mumbai, and therefore, it's a lot of doing business in India is about doing business in the states, as the previous panelist was also noting about Rajasthan and other states, which doesn't really figure in this ranking itself.
No, that's true. I just want to go into a little detail of what we did in terms of taxes, which has made that ranking jump. And remember, this is pre-GST. So the report talks about, first of all, implementing an online platform for the electronic payment of the Employee Provident Fund, introducing administrative measures to ease corporate income tax compliance, the use of electronic tax filing and payment systems, introducing ICDS in 2016 is one big reason. Now, I want you to tell me in the context of today, because GST, of course, has not was past the cutoff date. June is the cutoff date. GST was put in place on 1st of July. Today, with the way GST is being implemented today and tweaked on a regular basis, is it easier as compared to a year ago, when we were up 53 points, because this is for a year ago?
Well, I think we would still call ourselves in the initial phases of teething trouble. So I just landed, and you may hear aircraft behind me. But I think we are still in the initial phases. There is no question that for small and mid-sized businesses, life is tough at the moment. They're still figuring out the complexity of the multiple rate regime that we have. But I'm strongly supportive of an imperfect GST versus no GST. So if the survey was done today on paying taxes, we would rate high on the design. Yes, we've simplified numerous taxes into one regime. But on the ground, it's certainly we're dealing with the initial complexity of adopting that regime. I hope by the time the survey is repeated, 6 months, 9 months out, the experience will be different, and the government is certainly seems to be committed towards taking steps in that direction.
All right. Shubhada Rao, if you can come in on how significant this is at this point, because when the narrative and the conversation has been about, is India facing some hiccups on the economic front? We had Q1 GDP numbers, which led to a lot of questions. An ease of doing business ranking jump of this proportion, how significant is it?
I think it reiterates the efforts of the government over the last 2 or 3 years to focus completely on improving the ecosystem for the businesses, both domestic and global companies, to come in to have somewhat of a business-friendly environment to get created. Looking beyond the subcomponents, I see 3 underlying themes which are working well in India's favor. The first and most obvious one is the use of electronic platforms, and initiating in the areas wherever there is a larger scope for automation and reducing the dependence on documentation. So in a way, single window clearance, that kind of a method being adopted. I think that saves cost and time delays and overruns, and we still have some path to walk to get a very high rank in some of those things, but the process has begun. The second theme that I would think is, India's focus on institution building and strengthening those institutions. I think wherever you have seen institution building and institutions working very well, for instance, I would like to draw the attention of protecting minority investors. We have seen a rank of 4. I think that just goes to show that wherever the institutions have remained and have been imparted strength, I think those are the areas where we have seen very solid ranks. The third theme that I would obviously concur with everyone is strengthening the legal framework. Now, enforcing contracts and, bankruptcy code becomes a classic example there. I think these three themes have been the clear focus of this government to make sure that the businesses, have a more friendly environment to commence. Very clearly, as was also being pointed out, we have some way to go. Land and labor reforms remain on the unfinished agenda kind of platform. Now, we need to remember that centre and the states will both have to walk in tandem and work in paths together for bringing in the land and labor reforms, because these can't be, completely coerced by centre. State governments have to equally, be the more important effective players in that. So we have a scope, and as everyone has been pointing out, we have not yet seen GST, getting incorporated in our rankings, which will happen the next year. Surely the rank will improve significantly. And to the earlier comment and remarks being made around the implementation of GST, I think I also concurred that you needed to bring GST on board, and the imperfections along the way can be sorted, but it was very critical to bring perhaps the biggest reform in few decades to be brought on board. And so long as the government has been responsive to remove the glitches and address the concerns, I think we are only going to see a faster pace of implementation of a smoother GST to aid businesses. So if I summarize the whole discussion, my sense is we are poised to improve our rank further significantly going into the next year. And as has been spoken by earlier speakers as well, the focus being on implementation, if that is adhered to not just by the centre but also the states, it unleashes competition even among states. The whole of last 2 years, what we have seen is states are actually, trying to get into the best eco-environment that they can by putting, in their roadshows, the ease of doing business rank. To me, that's a very, very positive, factor to look forward to in looking at the overall economic growth in the country.
I'll just come to what we need to do next, Ms. Rao, because jumping up in the rankings is, of course, a big boost, makes us a more attractive investment destination, one would hope. But in practicality, what perhaps small and medium businesses face in the current context, in the backdrop of, say, demonetization, GST, etc., what do we need to focus on as the next steps?
Is that for someone specific?
That's for Shubhada Rao.
Is it to me?
Yes. Yes, Ms. Rao.
Oh, sorry. Was that question for me?
Yes, it is, ma'am.
Yeah. Okay. So we have seen that, yes, MSMEs did have a difficult transition time. In fact, it's ongoing to move towards GST. Any segment of the economy which is moving from a less formal to a formalized economy, they're bound to be hurdles. They're bound to be, barriers to have a smoother transition, using of technology, being able to, get the paperwork done, particularly related to input tax credit and getting the backward supply chain sorted. I think some of the medium and small players who are relatively more savvy have been able to migrate very well. But the ones that need hand-holding, and I admit there would be a fair amount of those, that segment of MSME in terms of hand-holding, I think all it needs is to educate them, to take them through the stages of how to migrate from a less formal or informal part of the business to formal business. It won't be obviously, I think, an event. It will will be a process. There will be teething problems. But as I said, and I would like to reiterate, as long as the government is trying to ease the hurdles and lessen the pain, like for example, the quarterly filing being allowed and so on, and recently the government did announce some measures. I think as long as these measures are to address the hurdles and the difficulty and the pain points of the MSME players, I think going forward over the next few months, we could probably see, that particular segment in our economy responding and adjusting to the new taxation framework. So it will take time because it's a large segment. It is a relatively, on a relative scale, less informed segment, and that is the segment that you need to migrate to a more automated system and more formalizing of the system. So yes, I think over the next 2 quarters, hopefully we should see a fair amount of improvement in that segment as well.
Okay, I want to now welcome Niti Aayog CEO Amitabh Kant to our conversation. Thank you so much, sir, for speaking with Bloomberg Quint. Now, the title of this year's survey, Doing Business 2018, is called Reforming to Create Jobs. And, I want to start off in that context. Of course, it's a big jump for India. Where do we fit in the Creating Jobs Index, which is not a part of those 10? But does our big jump translate or reflect into the task of creating jobs?
India had made itself a very complicated, a very difficult and a very complex place to do business in. And it's important that this whole stress on being easy and simple has come in. And there's been a lot of dismantling of processes across different indices, and that's why India's moved up on 6 of the 10 indices, but on distance to frontier, we moved up in 9 out of the 10 indices. And that means that we are benchmarking ourselves against the world's best. And as India becomes easier and simpler, my view is that jobs are not created by government these days. Jobs are created by creating an ecosystem where private sector can create wealth. And there are newer and newer kind of jobs, and therefore the country must become a very easy, very simple place to do business in. And what this whole impetus, this massive jump of 30 position for a large country like India demonstrates is, firstly, I think the political will to reform. Secondly, I think over the years, Indians have been working in silos. It has demonstrated that we can work as a team to make major changes. And I envisage that as we push for more changes, in the next 2 years, it's possible for India to make a very big quantum jump of getting in the top 50. And all this essentially will lead to creation of wealth in India, it will lead to greater investment in India, it will lead to greater jobs in India.
I just want to focus, Mr. Kant, on 2 areas where we've pretty much stayed the same. I wouldn't even call it a slip. Starting a business, of course, is one. Registering property, we've slipped about 16 points, and trading across borders. I want to begin with starting a business, because that is one space where this government has said a lot about its intentions to make it easier to start up a business. In fact, we are Startup India, Stand Up India.
So I think it's important to understand the methodology by which this is done. Many of the actions that we have taken a long time back, 2 years back, actually have now started to yield results, because the World Bank actually verifies through a large number of respondents whether they've actually been implemented on ground or not. So if you look at it on starting a business, on construction permits, on registering property, a lot of work has been done. A lot of work, this is all work in progress, and a lot of work has been done. But it has not yet led to improvement. In fact, what has happened is that many countries which had taken initiatives also may have moved up. So, and I think that in the next 2 years, our focus has to be on starting business, on registering property. We need to digitize all this. We need to digitize construction of permits, because it's a nightmare in Mumbai and Delhi to get a construction permit. And we need to put everything online, get human intervention away. And a lot of work on this has actually happened. So we just need to accelerate and provide greater momentum. And once the respondent starts telling the World Bank that actually this is getting done on ground, this is fully 100% on ground happening, you will see India making a big jump again. And that's why my view is that on at least 3 or 4 of these indices, construction permit, registering property, starting business, and we need to focus very, very strongly on trading across border. Trading across border is also very important. So these are 4 areas. But the 5th point I want to make is, the 5th issue is about enforcement of contracts. India falls very badly in enforcement of contracts. You know, commercial cases are taking 4.5 years, too many adjournments, and therefore it's important that in enforcement of contracts we make a big jump. It is important to establish commercial courts. It's important to have online registration of cases. It's important to ensure that there are no adjournments beyond 3 adjournments. And if we are able to do that as well, then there is a big chance of making India jump up very substantially.
You know, in fact, in enforcing contracts, we're at 164, but we have jumped up 8 points. Mr. Kant, I also have with me Vishesh Chandiok. He's, of course, National Managing Partner of Grant Thornton, and Shubhada Rao, a Chief Economist of Yes Bank. And I thought we'd get a perspective from those who are doing business or aiding those to do business to know what their experience has been, and does it mirror what the World Bank is saying in its rankings. And which is why, Vishesh, I'll come back to you with the key question that I was asking Shubhada a little while ago. In the context of GST, which has not been included in this year's rankings, where do we need to be by next June to make sure that GST boosts these rankings a lot more?
I think, it's really all the high-level statements that have been made. So, continue to, simplify the system. The number of rates of GST need to go down, to certainly no more than 3. Within those 3 rates, no more than 5-7 items on a lower rate and a thin rate, but really one standard rate. That standard rate, needs to itself, be looked at and reduced from where it is currently for competitiveness of industry. And I think eventually it needs to be about the ease of compliance. And therefore, there'll need to be a runway given to business, and has been given in this initial period, to do away with, penalties and, missing filing deadlines as business, tries to comply. I'd like to make one more point, the point Mr. Kant was making about the biggest opportunity is on enforcing contracts, no question about it. And whilst we have made a minor improvement there, eventually, India can only progress and attract investment, domestic as well as international, if one can enforce the contracts that one executes. And I think 164 rank is a significant place. The experience of what's happened with the insolvency code, the insolvency and bankruptcy code, the significant move we made there has been because of that defined time period, the 6 months I mentioned earlier. And really, that's exactly what needs to happen to bring that 4.5 years on commercial contracts that Mr. Kant mentioned down to a defined time period. And one needs to create capacity, but also define that end timeline. I think we are trying to, if I can paraphrase, change tires on a moving vehicle. So India is a very large and fairly fast-moving vehicle. There will be some wobbles as we make the number of changes we have, but that is the only way forward, and one has to congratulate the government of using competitive federalism, getting the states to compete with each other to make this massive move. 60, 70 places in 3 odd years is a significant achievement.
Absolutely. Mr. Kant, just your comment on GST, because this is the pre-GST jump of 53 points. In its current avatar, would GST, have us jump further, or would we see a bit of wobble there? Because if you link it back to ease of doing business, is it easier doing business right now with GST?
Oh, well, I have no doubt in my mind that GST will make India jump up further because it has replaced a vast number of taxes which were already under implementation. So you have one tax across the country. I mean, and the government has been responsive to making it further simplifying it. So I have no doubt, not only GST, but there are a number of other things which the government has done on construction permits, on registering properties, on starting business, which have actually not been taken into consideration because the methodology followed by World Bank is that they must actually be implemented fully on ground, and they cross-check it from a vast number of respondents. So you will see this happening in a year or two. You will see a big jump happening, and I think that's the way forward. You will, and it's very important to understand this, that it's, you know, India is a very large country. It's bigger than 24 countries of Europe. So large countries do not move up by 30 ranks. So it's a very remarkable achievement, and I'll tell you it's a remarkable achievement because there has been a huge political will for structural reforms, number one. And number two, in government we normally work in silos, but those silos have now been broken. There's a lot of convergence, a lot of integration to make things happen, and departments speak to each other to make things happen. And thirdly, I think this huge focus of digitizing everything, putting everything online, cutting out human intervention, and that's the only way to move forward.
I just want one comment from Shubhada on IBC. The implementation, of course, had well begun in the period that the World Bank has taken into consideration, but IBC in current day, do you think we're moving on the right track? There is, of course, litigation which has ended up slowing some of the processes, but do you think that the direction is correct and we will see it easier, in the whole insolvency process moving forward?
Oh, quite clearly, yes, because I think, this was a long-awaited reform, and after it took shape, I think it has begun well. Going forward, we only expect it gaining strength and momentum. Once we see 3 or 4 solid cases, moving forward in a resolute manner, I think it's only going to gather pace and momentum. So IBC is going to unleash a lot of positive, manifestation in terms of enforcing contracts and so on, and to my mind that should also galvanize our ranking further from the current levels. So these have been work in progress. Implementation has been done, and to see the final positive outcomes, I think over the next few months, these would just sort of reiterate the positives coming out of these IBC kind of reforms, and I have no doubt that going forward over the next few months we are only going to see further traction into these resolution cases. One
key comment from you, Mr. Kant, on what we need to do next. You've said very confidently that 50 is not far away, or 50 is not that difficult to achieve. What should be the next focused steps, where at least we don't find ourselves behind countries like Bhutan and Angola?
No, there's a lot of work to be done. I mean, a lot of work is in progress, and I think many things need to be implemented. So if you look at construction permit, we still are in 180s. If you look at registering permits, we are in 150s. If you look at starting a business, we are still not there. And if you look at enforcement of contracts, we are way off the mark. And therefore, we need the similar kind of major structural reforms in all these areas. We need to accelerate momentum. We need to push the pace. And we need to really go hammer and tongues at it. And if we do that, and which I think there is huge political momentum for this, the Prime Minister is personally committed to making India easy and simple, it's possible for India to make a huge jump in the next 2 years.
All right, I'm going to leave it at that. Thank you so much, Amitabh Kant, Vishesh Chandayok, and of course Shubhada Rao for joining us in this conversation. It's a good day for India. We're in the top 100. Can we move to the top 50, which is the aim? Well, it doesn't seem that impossible after today. And now the rush of good news on the economic front continues. India's fiscal deficit narrowed marginally to 91.3% of the budgetary target for fiscal 2017-18. The core sector has also strengthened with the growth hitting a 6-month high. What are the implications of these two data points? Ira Dugal sums up in this report.
Some positive economic data coming out at the end of October. The two data points that come in usually, that's the core sector data and the fiscal data, actually both giving you a slightly better sense of economic trends. I'll start with the core sector data, which I think is a bit more significant. You had core sector output growing by 5.2%. That's a strong number. If you compare where we were back in June when core sector was growing at 1%, from there's been steady improvement. In July, we were growing at 2.6%, in August 4.4%, and now September growth has come in at 5.2%. Given that core sector is a large component of the industrial production numbers, you will probably see a healthy industrial production number for the second month running as well. Just brief mention of the components of core sector to tell you what segments are doing well. Coal has done well. You've seen 10% growth in coal output. Natural gas output was up 6.3%. Steel was up 3.7%. And electricity actually saw a little bit of pairing of growth rates, but that grew at 5.2% as well. So the core sector data is certainly telling you that there is some improvement on the industrial side. To what extent and what level it normalizes at, you'd still want to see a few more months of numbers before you make a judgment on that. The second data point is the fiscal numbers. Remember, there have been worries about the government's finances because they had taken out a large part of their budgeted fiscal deficit in the April to August period alone. The number for September is actually a little bit healthier. So in the April to September period, they have taken out 91% of their budgeted fiscal deficit. That's still higher than what it was last year, which is about 84%, but it's lower than the 96% that you had gotten to up until August. Just to tell you how that actually math changes, as you go along in the year, your revenue numbers start to pick up, and if you front-loaded expenditure over the course of the year, you start to balance out a little bit and hopefully meet your fiscal deficit goals for the current year. Just a brief mention of the fact that on the capital expenditure side, we are now at about 47.3% of the budgeted expenditure being used up. That's actually a little bit lower than what it was last year, which was 54.7%. But on the revenue expenditure side, you're spending a little bit quicker. So revenue expenditure is at about 54.6% of the budgeted amount compared to about 51% last year. But if you put those two numbers together, they're certainly healthier than what they were last month.
All right, moving on to the big corporate earnings of the day. Bharti Airtel posted an inline set of earnings in the second quarter. Net profit declined for the 6th straight quarter, falling 6.5% to 343 crore rupees. Revenues fell marginally to 21,780 crore rupees. EBITDA rose by 17.4% to 7,922 crore rupees, while EBITDA margins contracted to 36.4%. Average revenue per user fell 6.3% to 145 rupees. So Amit Sarkar tells us the key takeaways from Airtel's Q2 performance.
Bharti Airtel reported better than expected numbers in the second quarter of financial year 2018. Revenue was in line with the analyst estimates and EBITDA was around 5% above the analyst estimated numbers. However, on the net profit side, it failed to beat the analyst estimates because of an exceptional loss of 179 crores in the second quarter. Now, in the second quarter, the company reported an average revenue per user of 145, which is lowest since the listing of Bharti Airtel, and a tad below the analyst estimates of 146. Now, data usage, which is the key for a telecom service provider, rose 1.6 times to 4 GB per customer. However, this is still way below what Reliance Jio reported. Now, Reliance Jio reported a data usage of 9.6 GB per customer in second quarter. On liquidity side, the net debt to EBITDA for the company stood at 2.91 times, while net debt rose 4% compared to last quarter to 91,480 crore rupees. Now, this is due to high spectrum payments and high capital expenditure in the second quarter. Sticking with capital expenditure, the capital expenditure in the second quarter was at 7,484 crore rupees, which is the highest in at least 8 years. Now, capex investment stepped up in this quarter behind data coverage and capacity, according to the company. The African business, however, surprised the street. The African business of Airtel, which contributes nearly 24% of the revenue, performed well in the second quarter. Now, the EBITDA margin for African business came in at 32.1%, which is the highest since September 2010, and this is on the back of the continuous cost control measures undertaken by the company.
Now, Interglobe Aviation posted strong Q2 numbers with profits seeing a four-fold increase. Profits rose to 552 crore rupees from 140 crores in the same quarter last year. The rise in profit was partly due to credits received from Pratt & Whitney and Airbus for grounded aircraft and delivery delays. Revenue rose by 27%, while EBITDA increased by 61%. Dr. Reddy's labs posted steady growth in the second quarter with earnings, but concerns remain in the US business. Darshan Mehta is here with a complete breakdown of the numbers.
So it was an operational beat by Dr. Reddy's this time around, not so much on the top line because we were anticipating close to almost 2,700 crore of top line to come in. 2,560 crore is the top line that has come in. As far as the profit number is concerned, we were anticipating close to 285 crore. It's come in about the 310 mark, so that's the profit. And the EBITDA margins also coming in much higher than what we had anticipated. Mainly cost controls and lower R&D cost is something that aided the margin coming up. US, as the case with Lupin, was a big disappointment. US revenues were down almost 11%. India revenues was up 2%, but if you adjust for all the restocking and destocking, it was up 10%, much lower than what the street had anticipated. Even if you're looking at what the management is saying, they're saying that the revenues, that the R&D cost will be almost 11%, 11.8% of the revenue. So there's a lot of rationalization that's going on. They expect to see results from the products launched in the US. So they've given a kind of decent outlook, but the bottom line remains that the beat came in only on account of cost controls, not by products or revenue launch that happened. So overall, operationally, we are saying it's a strong number, but all now eyes on what the management has to indicate in terms of what they expect going ahead now.
JSW Steel reported an operationally weak quarter with net profits missing estimates. The bottom line rose 29% to 836 crore rupees compared to 647 crore rupees in the same quarter last year. Net sales jumped over 27% to 16,818 crore rupees due to increased government spending on infrastructure projects. The EBITDA rose 3.5% to 3,036 crore rupees, aided by higher sales volumes and lower prices of key inputs such as coking coal. And Group CFO of JSW Steel, Sheshagiri Rao, says that shortage of water and the transition to the GST regime led to reduction in production in the first half of the year. He expects the company to perform better in the second half.
If you look at first half of the year, so there was water shortage which extended even up to July in our Salem. So that's why we have lost almost 160,000 tons of lower production in the plant. Similarly, if I look at Vijayanagar, particularly post GST, the invoicing, there was a confusion how the invoicing will be done, either by monitoring committee or by the seller directly to the buyer. So that is why they sought the guidance from the Honorable Supreme Court. That took some time. So the supplies of iron ore got affected in Vijayanagar. That's why the production was impacted at Vijayanagar. Both these two together, we could not produce to the extent which we could have otherwise done.
Now, a day after the Shriram IDFC merger talks were called off, the Shriram Group founder said that valuations weren't the only hurdle for the deal. Speaking to Bloomberg Quint's Ira Dugal, R. Thiagarajan said that a deal could happen at some point in the future.
Normally, deals take their own time to go through. What we have said is this will not go through within the time frame that we thought, no, we didn't think. Okay, initially some exclusivity period was agreed upon. And exclusivity period means during that period we don't talk to anybody else, that's all. Now that within the exclusivity period, if a deal has to be struck, that would have been a very unusual and a very improbable event. No deal of this kind of an wide-ranging complexity can be completed in 2 to 3 months' time. But somehow an impression was created that everybody is attempting to complete a deal within 2 months or 3 months. It wouldn't have happened. So there is nothing surprising to me, at least to me it is not surprising that we did not complete a deal within those 2-3 months' time. So it doesn't mean that a deal will not take place at some point of time in future. It can take place.
So you're suggesting, Mr. Thiagarajan, that the deal is not entirely off the table?
The point is, even the next 8 days or 10 days, we do not see the possibility of reaching agreement on a wide range of issues, not only the valuation. See, any deal, any working together between two entities, one of which has a 50,000 employee strength, there are so many details which have to be agreed upon. One is the valuation. The second is the objective that we have. We have to have agreement on the objective which we hope to achieve by working together. Then the quantification of that objective. What will be the value creation on that? There has to be an agreement. Thereafter, the teams, the management teams which will have to implement that merger, the integration problems, those have to be addressed. Only when we reach agreement on all of them, people are expected to go forward. So it was not, at least I did not expect, at least some of us within the Shriram Group also did not expect that a deal will be struck within that time frame. What was agreed upon was exclusivity, that we will not talk to anybody else in the meantime. That's all.
Now, Indian markets edged lower, led by a decline in heavyweights like Infosys, State Bank of India, Larsen & Toubro and Tata Motors. However, the Sensex rose 6.17% for the month of October. That is the biggest monthly gain so far in 2017. Among individual stocks, the metal index lost nearly 2%, while telecom index posted handsome gains. And the MD of Kotak Mahindra Bank, Uday Kotak, who is also heading a SEBI's corporate governance committee, says that public-listed companies should focus more on long-term goals. Kotak also insisted that boards must not prioritize quarterly earnings over long-term strategy.
This whole disproportionate focus on short-termism, which is creeping into public-listed companies, and the tyranny of the quarterlies, and the pressure which managements and boards face in moving to a very short-term approach. So in our report, we have tried to actually recommend that boards spend time on long-term strategy, have a strategic plan defining long-term and medium-term. So really also engagement by the stakeholders committee with long-term institutional shareholders. So essentially trying to get companies continue to focus on long-term strategic thinking and execution instead of the very short-term focus, which is a big issue in public listed companies in India.
Now catch the full speech from Uday Kotak at 11 this evening, only on Bloomberg Quint. Some national news. The BJP has declared Prem Kumar Dhumal, the two-time Chief Minister of Himachal Pradesh, as their chief ministerial candidate for the elections coming up next month. Prime Minister Narendra Modi tweeted his support, saying that Dhumal will once again make a wonderful chief minister. Himachal Pradesh goes to polls on the 9th of November. And Maharashtra Chief Minister Devendra Fadnavis has said that the Indian Army will help build a new foot-over bridge at Elphinstone Road Railway Station by the 31st of January 2018. Fadnavis, along with Defence Minister Nirmala Sitharaman and Rail Minister Piyush Goyal, visited Elphinstone Station today, where 23 people were killed in a stampede on the 29th of September. Sitharaman said that this is the first time the army would be roped in to build something that could be called civil work. She also stressed that this exception was made as the Elphinstone tragedy was so big.
This will probably be the first time we are asking army to come in to build what could otherwise be called essentially a civil work. Magar, the tragedy of Elphinstone was such a big tragedy that Maharashtra, particularly city Mumbai, which gives jobs for so many people from all over the country and which is constantly under civic stress.
कुछ पॉइंट ऐसे हैं जहां पे इस प्रकार की दुर्घटना के लिए एक संभावना बनती है, उसको तुरंत एड्रेस किया जाए, वॉर फुटिंग पे ये काम लिया जाए.
And some tech news now. HMD Global launched the Nokia 2 today. The Finnish company hopes the entry-level Android smartphone can tap into the lower end of the Indian market. The phones will be available mid-November. Here's Ayush Alewadi with a closer look at Nokia's latest offering.
Okay, if you're wondering what we're doing here at a metro station in Gurgaon, it's because HMD Global has decided to launch their new smartphone, the Nokia 2, at a metro station in Gurgaon. This is the Nokia 2, and they've decided to have the launch event, the global launch event here in India. Why? Because they think this is positioned and really made for India. Well, it's called the Nokia 2 because they say it gives you 2 days of power. That's kind of interesting because it has a 4100 mAh battery that actually powers this phone, and that's perhaps why it can last for 2 days on a single charge. But it's not a feature phone, if you're wondering what it is. It is a pure play 4G smartphone, and the good news is that it comes with stock Android. Out of the box, it comes with Android Nougat, and it will eventually upgrade to Oreo. So if you're a stock Android fan, well, then this comes with that. It's very rare to see it on a phone that is this cheap. How expensive is it? Well, as for the India pricing, it's not yet been unveiled, but globally, this one will retail at 99 euros. Now, the phone feels kind of sturdy, and that's something that, well, Nokia is really banking on to make sure that it sets itself apart from the competition in this space, considering Xiaomi has, well, contenders in this space. There's also products from companies like Motorola. What does Nokia really have? Well, this is, of course, HMD Global reviving the Nokia brand around the world, with India being a key market, is their sturdy design. They still have that Scandinavian sturdy design, and for such a cheap phone, they've managed to keep that aluminium unibody, which is kind of interesting. Well, when I say it has stock Android, obviously it means it has Google Assistant. It's perhaps one of the few phones that come with Google Assistant. That's perhaps because it is powered by a Snapdragon 212 chipset, which is, again, Qualcomm's way of connecting, well, the masses, right? The 200 series is also something that powers the Geo feature phone, if you're wondering where you've heard about that family. Well, essentially, this is the phone. It's got a very interesting camera as well, because for such a cheap phone, they've packed it with a 5-megapixel front camera for your selfies, and, well, an 8-megapixel rear camera. So it's an interesting, well, proposition. Let's see how it really pans out in the market. But for you, this is the first look at the Nokia 2.
Well, that's all the time we have in prime time. But before we go, a lot of reactions coming in on all of our coverage on the ease of doing business. And we thought we'll read out what some of our viewers are telling us before we say goodbye. So Brian has written in saying GST is very important and everything needs to be smooth and easy. Meanwhile, Prateek, of course, has put in quite a few comments. But one interesting one is that in the middle of all of this, what about the hunger index? Well, on that note, it's a wrap on this edition of Prime Time. But thank you so much for watching. Stay tuned to Bloomberg Quint.